Hi guys, so this isn't a typical video of me trying to explain to you why 90% of traders fail within 90 days. It's me trying to tell you to stop asking that question. Most YouTubers will tell you, I'll give you a reason why and try to explain to you why. But the reason is because you're trying to measure their success too soon. No one ever asks, do 90% of engineers fail within 90 days? Or do doctors fail within 90 days? I would also say, if you want to measure a trader's success within 90 days, why don't you do the same with other professions? It's a profession like any other profession. It's a skill like any other skill. So why are you measuring the success within 90 days? Why don't you go look for doctors and say, within 90 days, we want you to operate on do complex surgeries on a brain within 90 days, and let's see the failure rate. Or let's go check the failure rate amongst engineers. It's just a simple thing of saying, it takes time to build skill, it takes time to build competence. So there's no point in you asking why do you fail within 90 days. Stop trying to measure your success within 90 days. If I'm supposed to give reasons, which I will do because that's what people are looking for, why they fail in 90 days, even though I'm telling you there's no point in checking, because it's going to take you time to learn these things. It's not a get rich quick scheme. And if it's not a get rich quick scheme, then stop looking for success within 90 days, right? So if you are looking for failure rates, say within 2 to 3 years, and you extend your search to asking why do they fail within 2 to 3 years, then I can give you reasons. And so most important is changing their strategy. They hear this strategy has a 90% win rate, this one has an 80% win rate, so then they change their good strategy and then they go to a different one. And I've read in like a lot of books, they've always said the same thing, which is that most strategies work if you work them, right? It means that most work if you stick to them. Problem is, people are not willing to ride out the entire period. So if you go through Way of the Turtle, it literally shows you there was a time where they had 17 losses in a row, 17 losses in a row, but they stuck to their strategy, because what you need is a system with a positive expectancy return, not one with 90%, 80%, 70% win rate. Most successful traders have very low win rates anyways. Even if you go check out the 10 best traders, they'll always say the same thing. And I've done videos on that where they talk about having very low success, very low win rates, some even low as 34%. Lack of discipline is a major one. Lack of sticking to risk management, sticking to the pairs that you said you're going to stick to, sticking to the things you know, right? Not just trading things because you hear this person's trading the euro, so you also think you should be trading the euro, or this person trades exotics, so you think you should also be trading exotics. Trade pairs they are terrible at. That's a really important one, and very few people actually think of this. I remember going through a trader's history, and I said, let me look at your history. And I was like, did you realize that a lot of your losses, it was about 50% or even more than 50% of his losses were due to one pair. And I'm like, you are terrible at trading and stop trading it. So go through your history, see which ones you're terrible at and stop trading it. I'm terrible at the Euro USD, and I'm terrible at US dollar pairs besides the Rand pairs. So I just don't trade them. Day trading, stay away from it. It's a bad idea. I know a lot of people will promote it. It's a bad idea. Stick to long-term trading. Poor risk management is another one. I won't go into it because it's obvious that you must stick to your risk management and your plan. Poor fundamental analysis. I would also say, like, read a lot of books. Always try to update your knowledge on economics and finance by just listening to people on YouTube who are going into detail about such events, or reading on FX Street about economic events and what they mean. There are a lot of writers on FX Street that you can learn fundamental analysis from. Unrealistic expectations and returns. If you're measuring someone's success within 90 days, you're already having unrealistic expectations. These are the people who are saying, I'm going to give myself 2 to 3 years and I'm going to be a millionaire. Those are unrealistic expectations and no different to someone who's measuring success within 90 days. Trying to double, triple, and quadruple accounts. That's another major one. Which is why most of them fail, because they go to a demo, they deposit 100, and they're like, I'm gonna turn this into 1,000 within the next month. Within the 90 days, then they fail, and then people ask, why do you fail in 90 days? Overtrading is a big one. At most, try not to trade more than 15 trades per month. That includes, that doesn't include trades that are on a currency pair. So, for example, if you trade the Euro USD and it's one trade but you're adding positions, don't include those added positions. So try to stick to about 10 to 15 positions per month. Don't place more than 10 to 15 trades per month. And then don't measure your success too soon, guys. I think that's the major reason I think 90% fails, because you don't expect other professions to be proficient within 90 days, but somehow you're measuring traders within 90 days.